Hey, good morning, everybody. Welcome to the morning show. Happy Monday. Hope you all had a great weekend. Spencer Israel, JC Parets, Steve Strazza with you on this fine Monday morning. What's going on, chat? What's going on, everyone in the YouTube chat? Hello to everyone in the stockmarketmedia.com chat. If you're watching us on Twitter, hop on over to one of those chats. Say hi. We'd appreciate it. All right, let's get the show on the road. We're already running late today, so let's go. Let's go, go, go.
Good morning, good morning, good morning. Boy, has sentiment shifted over the past year. Steve Strazza, I feel like we're like in an alternate universe.
How has it shifted? Explain.
Well, let's see. It is now August of 2023. Let's think about what was happening a year ago. A year ago, you couldn't get on Twitter without one of these like perma-bear Twitter spaces where like all these angry old guys would be crying about how bad things are going to get and everything, right?
Uh-huh.
Remember that?
Yep, I do.
What happened to those? They're like non-existent.
So, yes.
Gone completely. Like they were like sell side guys. They were like new perma bears that weren't around in the last cycles. Like there were some recycled perma bears from prior cycles too, like mixed in there.
I know.
Gone. All gone.
I know the type you're speaking of. And here's the thing, like I always like to say the best sentiment data we get, you really can't measure. It's near impossible to measure, and last year was such a good example of that.
Yeah, you know, we do a great job around here of really aggregating all of the sentiment data. I think we do as good a job or better than almost anybody. You know, I can think of a few off the top of my head that do a nice job. Most of them are friends of ours, but I would put us in the category of a group that does the most work in sentiment, and yet still it's nowhere near perfect. And, you know, all the other friends of ours who do a lot of sentiment data, they'll also agree that it's far from perfect. However, you know, when you combine the data itself with the anecdotal stuff that we're seeing, when you combine that all, it's very powerful. You had a lot of sell side analysts, very, very bearish last year, super bearish. And now they're capitulating. That Morgan Stanley guy, what's his name? Fred Wilson. He's now like talking
Mike Wilson.
Right. Mike Wilson, he says now that we're like in a new cyclical bull market now, right? After, you know, maybe one of the greatest runs in the history of the stock market. And I'm not picking on Mike. I don't even know the guy. I'm sure he loves his kids. I have no idea. But now he's bullish, right? Right now, not a year ago or 14 months ago when the market bottom. Now, that perma-bear ETF, that nope, I think it's the worst performing ETF in the history of ETFs, now gets delisted. Now,
it's really like the worst performing ETF on our list of niche ETFs on a year-to-date basis most of this year.
A perma-bear ETF gets delisted now, right? Not at the beginning. And now, can we just throw up the magazine cover from this week? Come on.
I know. So these things that you're saying, though, JC, I mean, I mentioned this last week. Are we past halftime here?
Who knows? The point is, things are different. Things are much different. And as investors, it's important for us to open our eyes. Like, we're not just walking around with blindfolds on like, oh, that's not happening. That's not happening. You know what I mean? Like, we see the data. We see our own behavior. There's no analyzing sentiment is not an exact science. Like, open your eyes, look around. How about this one? You got a child robot riding a bull, racing through the floor of the New York Stock Exchange, making it rain research reports at like adults in suits with like ridiculous smiles on their faces. Like, what a joy to see this bull running through this old building. Like, oh, wow. Is this something you see near tops or bottoms, Strazza?
I got something for you, though. Where the hell did you guys come up with this one? Where did you find this? What is Money Week? This looks to me like it's owned by the guys who write The Week magazine because it looks similar.
It's British. Look at the next one.
I also had never heard of Money Week, Strazza.
Well, both of you guys, when this came out, you guys were in diapers. Go back. This has been around for a long time. Why don't you, this is what the covers look like as the new 52-week lows list was peaking last June and the market was bottoming. The next storm, why investors should brace for a wave of government defaults. Okay. And then back to the 70s. First of all, love the cover with great. With the Saturday Night Fever thing going on there. Love it. Clearly, they're not insinuating it's time to party. They're actually saying what to buy as the party comes to an end. But nice little homage there to Saturday Night Fever. Huge fan. But they're talking about like inflation and problems and bear markets and things like that, obviously. This is what the magazine covers were like as the market was bottoming. Can you just go one more time to see what that magazine cover looks like today?
So this is how you spent your Saturday morning. Digging through the Money Week magazine cover archives.
First of all, Strazza, there's nothing wrong with analyzing markets on Saturday mornings. It's something that I've done for many, many years. It's something that I enjoy doing.
I'm not saying that.
People are like, oh, JC, you shouldn't look at charts on vacation. I like looking at charts. Why wouldn't I look at charts on vacation? Oh, who looks at charts during the weekend? Get outside. It's like, first of all, I was outside plenty and I could look at charts on the weekend. What's wrong with doing something that I enjoy doing, something that I find value and pleasure in, waking up on a Saturday morning, looking through some weekly charts?
Nobody's giving you a hard time.
We're reading some of the research reports that our friends send us, maybe, talking on Slack with people like you, actually,
you know what? I was looking at charts this weekend too, and I was running some little studies on Bitcoin yesterday. You guys are wrong. You told me last Friday, you laughed at me when you said, oh, this is normal for Bitcoin. It's not. This is like the sleepiest price action I've ever seen. The Bollinger Bands are pretty much as tight as they've ever been. I'll get a chart.
It's only like 3-4 times in history that it's been this way, right?
If you go back for the past month, we've had 2 1% plus moves and 2 1% plus down.
You have a chart to show us?
I got a 1-day rate of change. I put it in the chat yesterday morning. It's not the prettiest chart, but it shows it.
Well, maybe you should put it in the doc so that we could show it during the show.
The price action is absolutely dead here. Bitcoin is trading like it's been delisted from every single crypto exchange. There's like nothing going on in this space. I don't think it's bearish though, right? Because it looked like this little short-term continuation pattern was resolving lower, and now we're getting absolutely no follow-through. So maybe we do end up seeing something like we've seen earlier this year. Yeah, this is ugly. This is not for a show.
Okay, well,
external use only.
Well, hold on. I don't know why you're changing the subject and stealing my state of the market segment here and talking about crypto when we're talking about market sentiment. I think maybe you're alluding to the fact that sentiment is kind of washed out in Bitcoin. People forgot about it. Is that what you're saying?
No, I'm just saying I was looking at charts this weekend too, and this was
got it. All right, let's get back to the topic at hand, which is the shift in sentiment.
Oh,
and now all these perma bears are either forced to go out of business by their fund families, or maybe their clients. Like, imagine you're a Morgan Stanley client, or even worse, you're an advisor, and you've been telling your clients to not buy stocks during one of the greatest bull markets in history because your analyst is telling you that. Like, the analyst is capitulating because he's getting bitched at by all the financial advisors, which is hilarious in its own right. And now they're all turning bullish or being forced out of business in the case of the Perma Bear Fund, right at the time where we are entering a very, very seasonally weak period. Why don't you show that seasonality chart? Stocks were supposed to do really, really well over the last 3 quarters, and they did. So if you find that surprising, like, you're just not looking at the data, because it's actually very, very normal for stocks to have done very well over the last 3 quarters. Now is the time when they're supposed to struggle, particularly at the index level, which has been part of like this regime change that we've been talking about, this regime change that we've been seeing, because this is at the index level, which is very tech heavy, very growth heavy, and things like energy, for example, by the way, on an equally weighted basis, already up 14% so far in the back half of the year, so far in the third quarter, 14% on an equally weighted basis. Energy is not going to make a dent in these averages, right? Energy stocks could triple. They're still not going to make a dent in these indexes. So again, we continue to see more and more evidence that we are likely in an environment where there's huge winners underneath the surface, but the indexes continue to churn sideways is really what it looks like to me. Why don't you show energy making new 3-month highs there relative to large cap growth, really showing that rotation, momentum entering a bullish regime. Speaking of regime change, haven't seen energy do anything like that on a relative or absolute basis all year. If you want to just quickly take a look at that technology chart again, if you're buying the S&P 500, a third of what you're buying is this, and that's no good. When you go chart by chart, you take the time to weigh all of the options on what you could possibly own as an investor. Is this the one that you're going to buy? Like right here, right below overhead supply? It's not for me, obviously. And then look at semiconductors, same story. This is my last chart. Same story. So these are the sectors that drove the markets, drove the indexes in particular throughout the first half of the year. And now that all these perma bears are either flipping, the magazine covers are flipping, the perma bear spaces no longer exist, the crazy ETF guy got taken out of business, like all that's happening now. It's a sentiment shift. It's very, very, very different than what we were seeing last summer. And it's, as investors, the first thing that we want to do is identify what type of market environment we're in. That's the first thing that we're going to do. And what I'm saying is that it's very different today than it was a year ago. And then after we analyze what type of market environment we're in, then we choose which tools and strategies are best for that type of market environment. It's different than it was a year ago, for sure.
I like it. Fresh 2-month lows for semiconductors, right? Like it's one thing, talk about the price action that you showed in the chart, getting rejected at a logical level of overhead supply. But now we're seeing that, fast move in the opposite direction with fresh 2-month lows in a lot of these semiconductor indexes. I'm looking at some of these other subgroups. XSW stands out. One of the cloud computing ETFs, Cloud, CLOU, stands out. Like they just completed bases and now they're pulling back to the breakout levels of those bases. I think it's important for those groups to hold. Semiconductors, I think they can correct a bit and it's fine. They got oversold a few months ago actually on the corrective action in Q2 and then ripped higher back to, their old highs. So semiconductors, I think, earned maybe deeper corrective action, but some of these reversal patterns that just completed, you don't want to see come undone here.
I think it's just going to take time, and there's nothing wrong with that. I don't know how long technology is going to be stuck below overhead supply. My suspicion is it's probably not even going to be to the end of the year, right? My suspicion is it's probably going to happen. We could right after Halloween, buy in October, get yourself sober. We could be a scenario where we get that end of the year ripper and it's led by technology. That wouldn't surprise me at all. I don't think we need a market crash. Could we see a market crash? Could this be 1987 all over again? Sure. I doubt it, though. I think this is going to be a healthy correction through time, in my opinion, with sector rotation. Some of the components that have much less exposure to these indexes doing some outperforming. That's how I see it. I don't think this needs to be the end of the world. It could. Maybe. I hope it is. I hope it does crash. I mean, I don't care, right? I don't think it is, right? So I'm not betting on a crash, right? I'd be okay with one, but it's not something that I'm betting on. And the other thing, they're telling me that Mike Wilson, this Morgan Stanley guy, did not capitulate. Well, this is a guy who's been telling you that we're going into a recession and how we can't buy stocks and all this stuff. That literally the title of his latest note was, quote unquote, a new cyclical upturn. So you can justify it however you want, but that's as capitulatory as it gets from a sell side firm bear.
Sounds that way to me.
Yeah, a new cyclical upturn. Does that not sound bullish to you? Right.
Yeah, go ahead and check out slide 1. That's that software chart I'm talking about. There's just a lot of this kind of stuff going on right now. And you want to see these bases hold, right, JC?
I don't necessarily want to see anything. I really don't care.
If you're a bull, you want to see these bases hold. I'm sorry.
I'm not necessarily bullish software. And quite frankly, I'd rather them lose those levels and sell off much further. I think the pain trade here is down.
Being difficult this morning. Okay.
I'm not being difficult. Why would I want them to hold? I couldn't give a shit about software stocks, right? So if software loses those former highs, I think that's a good thing, and it would make the technology in general a more severe correction, well deserved. What are tech stocks up year to date? Like 50%? Yeah, man, hammer these things.
So on slide 2, also, these are 2 of the most important and largest industry groups in the entire U.S. market and world markets. Software, cloud, they're both software. If these bases don't hold, then what that tells you is that these patterns that we thought were telling us that new primary uptrends were underway are actually not completed. So more sideways for these groups, and these are equal weight and really good representations of the broader tech sector. So I think it would probably mean
cloud is technically software.
What? Cloud software.
Oh yeah.
And I'm still getting pushback from Billy. Billy, there's zero chance I'm going to read this guy's freaking research report. The headline's all I need. You think I'm going to read a sell-side analyst research report? Are you on drugs? Come on, Billy.
You know
what? Better than that.
You know what they all do now? That they all do the bull case, the bear case, and the base case, right? So they're always going to be. They're always right.
I'll give you the base case.
Come on, Billy. You're better than that. Read this research report from the sell side. Are you shitting me?
All right.
Anyway, can we get into some earnings? See what's moving this morning?
Well, I'd rather not. I'd rather wait just a minute because we're gonna have Jay Woods on in like a minute here.
Ooh.
Chief Global Strategist of Freedom Capital Markets, and there's really, honestly, from an earnings perspective, there's like 1 or 2 today, but it's retailer earnings season now. So, and it really starts like kind of tomorrow. So tomorrow, the rest of the week, we'll have Home Depot. We'll have who else do we have? Target this week. We got Walmart. We got John Deere. They're not really retail. TJX, JDW. So we got some retailers, but that's later in the week. It's a light earnings slate this morning. We did have one interesting M&A headline over the weekend. I know Strazza saw this.
The Cleveland Cliffs, they said no.
Yeah.
Cleveland Cliffs tried to buy U.S. Steel.
Yeah, and unsolicited.
First of all, who knew Cleveland Cliffs was bigger than U.S. Steel? Did you know? I didn't know that.
Yeah.
No.
Yeah.
It sounds like they have other better offers on the table that they just haven't disclosed yet.
Cleveland Cliffs is $7.5 billion. U.S. Steel is $5 billion. So I mean,
dude, there's no large caps. We joke all the time, right? There's no large caps in materials.
What year was U.S. Steel incorporated? Go.
1901.
How do you know?
I was reading this weekend. What were you doing?
They gave the history right in that article. Yeah. It talked about
1901. That's pretty gangster. Based in Pittsburgh, Pennsylvania. By the way, Pittsburgh, underrated town. Underrated. I like Pittsburgh. Go to a baseball game. I've been to a bunch of football games, college and pro. These Steelers fans are crazy in a good way. I mean, unless you're in an NFC North division fan, but I'm not, so I don't care. Good eats in Pittsburgh. There's a sushi joint in Shadyside that I love. Go get omakase. All the Steelers offensive linemen go there. I'm telling you, Pittsburgh, underrated. Spencer's like, eh.
No. I think it's properly rated. I think it's not underrated. It's not overrated. It is just rated.
Strazza's never been to Pittsburgh, I bet.
Definitely not. You know that. I mean, no shot. What do you want?
Okay, so
that's cool.
So anyway, $35 is essentially what the offer came out to. $35 per share.
Stock's at 22, so that's a 50% premium almost.
Right. It was a cash and stock offer. U.S. Steel said no. Then they said we're still exploring. To Steve's point, we're exploring other alternatives. So maybe they have offers for parts of their business. There's only 4.
They have other offers, dude, or they wouldn't put this one.
There's only 4 steel manufacturers in the whole country, right? There's these 2, Nucor and Steel Dynamics. Like that's it.
Bethlehem Steel no longer around. Former Dow component.
Yeah.
Right, Strazza? I was giving Strazza all kind of fun facts about Bethlehem Steel.
JC's been nerding out. History.
Yeah. Well, I live 10 minutes from Bethlehem Steel, so
it's
interesting. When I moved here, like I was kind of like doing some homework and stuff, and it was fascinating how we won World War I and World War II because of Bethlehem Steel. It was a Dow component for 7 decades.
I didn't know it was a Dow component, and JC shamed me for my lack of market knowledge.
Yeah, come on. This Bethlehem Steel is a big deal. Now it's like an arts center. They have concerts there. There's a casino. Boy, have times changed over at Bethlehem Steel.
All right, can I talk about something that I care about that you probably don't care about quick?
See what happens when you're paying employees pensions that haven't worked there in 30 years? You go out of business because that's dumb.
All right.
Gonna make some more friends this morning.
We got Jay. We got Jay here though. Can you wait till after Jay?
Yep, fine, sure.
Okay. Jay Woods, Freedom Capital Markets, live from the floor. I think I don't know if he's ready. He's here. I just lost his visual.
Executive floor governor at the New York Stock Exchange, by the way. You're underselling Jay Woods.
All right. I hope he's ready. I'm going to just bring him on and see what happens here.
Do it live.
Yo! Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jay Woods in the house.
All right. Can you see and hear me? Is this working?
Yeah, look at you.
We had some major. I was glad we weren't live 30 seconds ago. This whole thing collapsed and it was a disaster. So it's good to be with you guys. How are you?
Good.
Couldn't be better, my man. How's the New York Stock Exchange today? A little quiet down there?
Yeah, it's quiet. Listen,
half an hour before the open, a little quiet.
Yeah, August 14th. There's not, we can talk retail earnings if you want to see where the action is. But no, it's summer doldrums. We're having the summer seasonal slowdown. A lot of the savvy vets are kind of on the beach this morning or off doing their own thing. And, we're in a little bit of a downturn. No big deal. But, the headlines may be coming soon if the Qs go lower and we see some interesting earnings out of Walmart, Home Depot, and Target this week.
Jay, I have a question.
Hold on. Just want to circle back on the New York Stock Exchange. Jay, you've been on the floor of the New York Stock Exchange since what? Since the 1929 crash or something like that?
Well, you invert those numbers. 92, 29, it's all the same thing. But
you don't look you look good. You look great for your age. But you've been there longer than most people have been alive.
I appreciate it. I had beautiful flowing blonde hair when I started down here, so it's time has taken its toll, but it's still the greatest place in the world to come every day.
Speaking of long blonde hair, I watched the Stone Cold Steve Austin documentary last night.
Ooh, nice.
I didn't know he used to have long blonde hair. He played football in college in Texas. Great. It was like half an hour, 40 minutes. Highly recommend. Jay, how real is this? Nobody's on the floor of the stock exchange in August, and then come September, everyone's back. Like, how different is it between August and September? And is it the same these days that it used to be, or has it shifted? Can you talk to me a little bit about that seasonal population of the floor? Yeah,
well, it's the population has shifted downward for years. That that hasn't been an upward trajectory since 2000. But yeah, no, it's the same routine. August is one of those days you hear sell a May and go away, but it is slow, and there are a lot of people that are kind of new in charge, and they're running the show, and the volatility definitely is heightened because you don't have as many eyeballs watching the screen as you normally do. So there is truth to that, and then like you and I and every technician knows about the seasonal factors in play. But the volumes in August tend to be lower. September, it picks up because everybody's back and everybody's going into action, and you see some things happen. But we just got through earnings season, so the big names are reported. I think we only have 50 left in the S&P 500, if that, over the next week and a half. So yeah, it's kind of quiet. It's a good time to go away, go to the beach, dip your toes in the sand, and not worry too much about the market. But you and I, Strazza, we know this is when there's opportunity. There's always opportunity, and I think we're going to get some over the next few weeks.
Jay, do you agree with do you see it when you're there this time of year? Like Fridays are kind of lazy and quiet, and a lot of traders might be taking long weekends, and a lot of the moves on Fridays tend to get reversed, come the next Monday. Is that true, or is that something people just talk about?
No, it's totally true. It's true in every aspect of life now, especially with this new work from home environment. We don't get to work from home here But you do want to try to cut out early on a summer Friday and spend time with your friends and family and just enjoy a little bit, because it's slow everywhere you go. There's less traffic coming in on those 2 days. It just that traffic equates to trading. There's not as much going on the third Friday of the month. Options expiration, yes, it can get a little crazy into the bell. If there's stocks you're following and you really need to be there for, then you come in. But otherwise, yeah, we're normal like everybody else. In the summer, you kind of want to try to get out and enjoy this good weather here. It's been bizarre weather here in the Northeast. Nothing, we get smoke conditions every once in a while now. But it's
because of those Canadians.
Yeah, the damn Canadians! My God, it's just can we build a wall over that? But yeah, it's that has calmed down a little bit. But no, Friday slowdowns have been the norm for years down here, regardless of how many people are actually populating on the floor.
Should we care less about weekly closing prices in the summer because of this dynamic?
No, price is fact, man. You got to always look at it. Oh my God, no! In fact,
who is this?
So, I know. Well, he's trying to play both sides of the fence. I know he's on the same school of thought. The weekly candles actually now are more important than ever. I mean, you got to back some of this out. Look at some of these stocks that went on these tremendous runs. Your Magnificent Seven. Okay, back them out. Look where they're coming from. Look what they've done. On a weekly basis, you're seeing some nice flagging patterns on stocks like Microsoft and Apple that just broke out the new highs. NVIDIA, it still hasn't made headlines. It went from 480 to 408. No one's, panicking yet. But if we break 400, then all of a sudden people are going to be looking, whoa. Well, let's watch that gap to how it got up there, and then we can talk. I always like to back it out. I backed it out in a lot of the stocks I'm looking at. You go to the overhype side and you look at something like Carvana, up 800% year to date. And, okay, back it out. Where is it coming from? What has it done? It's not going to run back to $400 or $500, but there's money to be made on, weekly and intraday basis all the time.
I mean, NVIDIA, like you said, it's still 10% above its earnings gap.
It's up 180% year to date. Yes, but and it's not oversold, and the Qs aren't oversold. So we've got some more downside. In fact, the Qs, the Nasdaq 100, it's down 6% from its high. All right, it can be down an easy 12.5%. You got a nice Fibonacci retracement level. You got last August Jackson Hole highs. We're going to be following that in the S&P 500, 43.25. That's the number you're going to hear for the next 2 weeks if this does continue to go lower. And guess what? These are normal, nice pullbacks. This is where I want to put money to work. I don't see like the end coming anytime soon. I see a normal pullback in a very nice bull market.
All right, I'm going to stop you right there, Jay,
Go.
because you are truly a tech junkie, growth junkie. I feel like every time we have a conversation, we're talking about growth and tech. Here we are. I'm surprised you haven't mentioned Tesla yet. Can we talk about the rotation we're seeing into other areas?
Please.
Perhaps less sexy. Energy on an equally weighted basis up 14% already in the back half of the year, and we're only not even halfway through the third quarter, already up 14%. Anybody talking about energy?
I've been, but you go on other shows. That's why I like coming here, and no one wants to talk about that. Let's talk about Tesla.
First of all, there's no other show that matters. You're on the right.
All right.
Anytime you want to talk about fossil fuels, you let us know. We got a slot for you.
All right. Yeah, I was looking at steel charts before I came on here
hold
today.
On. So the idea is to buy the stocks that hurt the environment the most. Is that the goal here?
Right now, yes, that is definitely the goal. The energy stocks, although they are a little overbought right now, this is where you want to be. This is the strength. The last 3 months, what's the leading sector of all the 11 sectors? It's the XLE. Look under the hood, which is something we always do. It's 39% are two stocks. Those two stocks haven't even led this yet. Look at ExxonMobil. Look at Chevron. Chevron's below its 200-day moving average. There are 23 components
I'm long Chevron.
I know. You're waiting. Come on, join the party here, Chevron. Let's go. And once you go, ExxonMobil did on Friday, had a nice little breakout, closed above 109, which was key. And it looks like it can lead even higher. And then the index itself, there are 23 components in it. 100% over the 50-day, 91% over the 200-day moving average. This is ridiculously healthy.
This guy with the internal data.
Yeah, well, you got to prepare.
And very impressive.
Well, this is one thing that you talk about a lot. I focus on all the time is when you're going to talk about these sectors, break it down. Because if you're going to talk about tech, then it's really 3 stocks. It's really 2. It's Microsoft and Apple. You can throw NVIDIA in there too. Consumer discretionary. Come on. It's 2 stocks. It's 2 stocks. So, and energy's 2 stocks, and those 2 stocks haven't done anything yet. So that has my attention. And yes, it could pull back on an RSI level. 48%. I think the number was 41 or 48, but over 40% are overbought right now. So you can see a natural little pullback. But these will be healthy pullbacks, and 52-week highs not out of the time horizon. And then let's play weathermen, because I know technicians like to be weathermen. I don't know why this is, but we do like. You do not? All right. Well, you're the one. We like maps, atlases.
I do like maps, though. I love maps.
Yeah, geography, but weather maps are fun. And what season is this besides the summer slowdown? It's hurricane season.
It's football season, baby. Let's go.
No, that's right. How you Canes looking this year? They going to be any good?
They win the national title, baby.
Okay, well that's pretty good.
They're playing Temple at Philly. You want to come?
Let's go. When is that?
End of September. Let's go.
Done. I got to be there for a high school reunion. Maybe it all coincides. We'll tailgate and.
Nice.
Do you drink wine at your tailgates for these? I don't know how you drink in these tailgates.
Jameson.
Okay. Oh wow. Okay, that's not too bad. But we'll do it right. We'll Philly it up and. Yeah, poor Temple.
Yeah. We'll be the only 2 people there, I think.
And no. Temple's got like 10 fans. They'll show up, so it'll be good. Yeah, my niece goes there, so we'll hang out with her. It'll be fun. Cool. But getting back to the whole energy play, I think this is the sector. And then you know what else looks good? And this is where you get a little defensive. Utilities, right at a support level, starting to turn a little bit, catching a bid. Healthcare. Watch out.
Utilities sexy again, right?
Yeah, well, listen, it's boring, but if you want to make a little bit of money and not get caught in a downdraft in some of these growth names, buy a little utility stocks.
What about materials? Jay?
Materials, I've been waiting for them to pop for a while. They've got my attention. I look at a few of them. Like I was looking at this chart of RPM, a stock I used to be a market maker in. This stock looks like it's flagging nicely, wants to go higher. Lind is the biggest name in the material index. That looks great. PPG's trying. The materials, I think they're going to follow, but right now it's not popping like I wanted to. I thought that was going to happen and follow the industrial lead, which happened about 6 to 8 weeks ago and continues. Look at Boeing. Oh my God.
Is it because materials still have all these shitty gold miners in them? You know what I mean? Like if you do like a materials X gold miners, it's not as bad.
Maybe it's very equal weighted. So you don't have that dominant stock like the Sherwin-Williams that could take it much higher. That could be the problem. And then as oil increases, it does affect a lot of the stocks within it. Because higher oil prices could affect their bottom line. So materials is a sector that I'd be neutral to bullish on, but it's not getting the love. It's not following through. And it's like utilities, like they're boring as hell. But now,
I got one for you. Speaking of boring,
go.
The second largest component of the S&P 500 and the second largest component of the Dow Jones Industrial Average is healthcare. Mm-hmm. So if it's not going to be tech taking us higher,
it is healthcare.
You look at the second largest component, and it's healthcare. Can healthcare lead this market?
Yeah. Look at Eli Lilly. My God, what have they done? They just had their best week ever. Stocks making 52-week highs. And then you say it's the second biggest component in the Dow. I'd argue it's the biggest component in the Dow because the Dow is price weighted. And you have United Healthcare and Amgen
10%.
that are, it's a monster. United Healthcare still hasn't really caught its wings, but Merck is doing fantastically. I'd avoid Pfizer. I mean, my God, there's a pairs trade. Buy Merck, short Pfizer. But yeah, these stocks are looking good to me, and the tailwind there is great. The pipeline is fantastic. The ones you want to avoid are anything that was big in COVID, because stories. I mean, although I saw a headline, and this is the most ridiculous headline: COVID cases up 48% in California over the weekend. I was just in California. I'm like, okay, up 48% from what? 2 to 1 more? Like, what are we talking about? But
you and I got COVID together. Does that make us blood brothers?
Yeah, I think you gave it to me actually. It's
to me.
I don't know. It was a good hug and well worth it. So I won't complain. Yeah, that was some super spreader event. That was a good time. We got to do that again. Well, without the COVID part, of course.
Yeah, let's do that again. Let's schedule something. Let's schedule like a midweek event in New York. You could talk about the markets. I'll say a few words. We'll bring in some other friends. It'll be dope.
Right.
Last question before we let you run. You seem to be interested in energy. Clearly, the market's interested in energy. Are we looking at oil back towards 130?
Well, let's crawl, walk, run here. Let's get it back above the 90s.
We're in the 80s.
I heard you say something with a 2 handle, if I'm not mistaken, on a recent podcast.
As investors, and
Yes.
again, I have no idea where oil goes. It can go to zero.
Yeah.
I have no. Maybe we discover new energy source tomorrow, right? I don't know. But as investors, which the 3 of us are here, and if you're listening and if you're not an investor, you're on the wrong show, right? So if you're an investor, you got a couple of bucks to put to work. I think it's important to at least consider the possibility of what the world's going to look like with oil at 250. Does it mean that it has to get there? No. But I think it's irresponsible to take that off the table, right?
Well, I'll address the 130 target first, because you got to get there before you talk even higher. I think it's poised for one of these super spikes. And a super spike in oil would be a breakout, then everyone chasing performance, even though you've been in it. And then once you see the covers of the magazine, oil gush, get the hell out. Just like you had a nice little piece this morning. We had a bull riding a robot cartoon character down here on the floor. That was interesting. I don't like these perma bears going bullish. That's got me a little concerned. But energy, I think during this seasonal play with the hurricanes, you get one hurricane in the Gulf, there's going to be a panic. There's going to be a rush to a lot of these energy names. And I think they're poised. Technically, the setups are there for them to not only go higher, but do it very quickly. So you may see a spike.
That means rates are going higher too, right?
Unfortunately, yes, it seems that way.
Why unfortunately?
Well, yeah, you want to focus back on the growth names, how we started this, and that will, have a little bit of an impact on them. And, but
it's
we
only
rotate.
It's only unfortunate if you own those names.
That's a good point too. But
what about all these boomers who've been dying for higher rates on their bonds for decades, and now they're getting it? What about them? They're not.
I don't know. Are we going to be talking? Can we talk gold next too? If we want to talk boomers.
No, there will be no talk about gold today.
Thank you. I appreciate that. But no, I do think higher for longer with the rates is going to be a topic that is here to stay. The 2s and the 10s continue to hold above key levels. That's not healthy for a lot of the growth names, but the energy names, I think there could be a nice 2-month run here, which would coincide with a downturn in the overall market, August, September. And then, we'll reset and end the quarter strong. This has been, as people that study cycles, this has been textbook. And I think we're playing out with the energy being the next leader higher. And that lead could accelerate over the coming months.
Strazza, you want to finish it up? Strazza doesn't like when I steal all the questions when we have a go.
No, this was good. I was going to talk about boomers and the bonds. I mean, they're not hoping for higher rates. Their bond prices go down. Then.
Yeah.
No, they're buying new bonds, bro.
Yeah.
They're into it. Yeah, they're into it.
They're retired. They have their old bonds, and then they go down in value. And the banks too, they want higher rates because they're.
Man, they've been listening to the sell side. They got a lot of cash to put to work.
We didn't even talk about the financials. They're hanging tough, especially these regionals. They just got downgraded last week. I mean, what we had, the S&P in 2011, then Fitch and Moody's is like, I guess we got to do something. Hold my beer. We're going to downgrade some of these regionals.
You know that these guys are still around. I thought they disappeared in 2008.
Well, they traded like 20 banks in one day.
Well, they were relevant for like 3 hours. The banking index was getting crushed that Monday morning, and then it was down 3% across the board, and some of the individual names were down 5 to 7. And for the week, let's back it out weekly. Not much of a move. You wouldn't have known anything really happened. They're hanging tough. I think the regionals may be okay right here. They have come pretty far, pretty fast. They do have some overhead supply ahead, but the way they hung tough last week was a story that no one talked about either.
It's funniest looking banking crisis I ever seen, Jay.
Exactly. It's crazy. Hey guys, I got to run, but it's always great to see
Do
you.
your thing. Try not to
All right.
break anything in there. All right. It's not a
I
big deal.
won't. Yeah,
All right.
crack the screen on my phone, getting ready for this appearance. So, time to go to the Apple store, help them out. All right,
Do it.
talk to you guys.
Adios.
All right.
Jay Woods, he's the man.
Yeah. Hey, U.S. Steel is up 25%.
So maybe your conspiracy theory about them having other bids might not be that far off.
I mean, they implied it. They said they're exploring alternatives. What?
Did they? Well, there you go. Well, so that's not much of a conspiracy theory then, huh?
Conspiracy theory. It's what's happening. But like, I mean, you said it, Spencer. How many steel companies are out there?
No, I said there was 4. I was being a little bit facetious. There's more than 4, but
there's probably 10 or 15. Like,
yeah,
really, there's not many options. All these companies are getting acquired. Like I was just looking through the press release news this morning. Arconic, one of the largest aluminum companies, they're gone now. Apollo just bought them. Like this is what's going to happen. They're going to come.
When does Amazon start buying like steel stocks?
Never.
You know what I'm saying?
They don't want to be in that business. They can't be in that business.
You would have said the same thing about Washington Post. You would have probably said the same thing about Whole Foods. Saying.
Did you hear the news about what Amazon is doing at the Whole Foods now? There's a big Wall Street Journal article on it yesterday.
No.
Good stuff in the Journal this weekend. So
I stopped getting it. They stopped sending it to me. I don't know what happened.
You got to stay up on them. So you go into the Whole Foods and you scan your hand. That's going to be a thing. And you pay with your hand. They know exactly who you are. And
wow.
So they have every incentive to not let this kind of stuff move to phones because they have an older audience, right? And they don't make money off of all of this digital, wallet stuff going to phones. That's Apple's game, Google's game, right? Facebook. They don't want that. So Amazon's trying to do it with the hand.
Got it. So opening a MetaMask account is just not going to work.
Wait, Amazon has an older audience? Is that what you said?
Whole Foods.
Really?
There are people who use Amazon and go to Whole Foods who are my grandparents' age who have nothing to do with Facebook or Apple or anything else and don't have iPhones.
Okay.
Shop there for groceries, right?
When I used to live in Sonoma, in California, we wouldn't go to Whole Foods because we had Sonoma Market, which was the best place ever. Did I ever take you to Sonoma Market?
And Whole Foods isn't.
What a great place. They used to call it whole paycheck.
Yeah.
Yeah, I've heard that.
The locals. This is a local thing.
That's good.
Real fast, Strazza, what do you want to say before I bring Kimmy
on? Chinese yuan, literally crashing here. I mean, maybe a strong word, but how about this chart, JC? Chart 1. Oh. Yuan hitting its lowest level since late last year, and frankly, it's not far from being on its lowest level in 15 years. You have to zoom all the way out to 2007. Typically, the yuan falling is signs of distress in the global economy, right? Usually if China is struggling, they're weakening their currency, and then there's ripple effects through the rest of the world that are typically felt, which is why risk assets like the S&P 500 tend to move with it over time. It's really decoupled for, more than a year now. Does this matter at all? This is a perma-bear chart?
It's a good one. It's a good perma-bear chart. Like, you know how we've talked about like launching like a website that's just perma-bear stuff,
There's a lot of it. Yeah, it could be its own website.
Like we could just, we thought about this and like maybe we could talk about this in recess, but Spencer and I were actually talking about it last week. Like it could be like a good service, but instead of like a perma-bear site, it's more of like a devil's advocate, kind of like a contrarian site, like always taking the other side. Like I think there's value there, no?
Yeah, totally. I mean,
But we don't tell the perma-bears that we tell the perma-bear, like we let them think that this is like for them,
It's one thing to make a bearish chart and analyze a bearish chart, but it's how you think about it, right? It's really like it's the way that they're framing charts like this that's different.
When you look at charts with a blindfold, it's hard.
Yeah. Or if you look at charts with a bias and you're looking for the bearishness in the charts, like I was yelling at you for last week.
All right, let's bring Kimmy on. Kimmy had a wild day on Friday. Let's recap it a little bit.
Kimmy.
Morning.
Good morning, sunshine.
How we
Hi.
doing?
Weekend?
It was good. It was good. You know,
How's
it was a little
Liberty? What's she doing?
Liberty's good. She's over here getting better.
Good to hear it. Good to hear. I worry about you, Kimmy. You know, I've seen Liberty grow up over the years. You know,
I know. You know, she's 14 and a half. So, you know, I worry about her too. You know, so I got to keep her strong. Hey, Rachel. I like Rachel.
Rachel's cool. Rachel's cool. Rachel's in New York. So next time you're in the city, you guys can go, do
Oh,
whatever
you know
it
her?
is. Oh, yeah. We know Rachel. Come on. Who doesn't know Rachel?
I don't know her.
She's like one of these shrink psychology, behavioral, trader folks. I like those kind of folks. I'm into that sort of stuff. All right, Kimmy, let's talk about Friday. What happened? What happened Friday? Wild day, huh?
Wild day. Lots of stop outs. Had some good had some good trades and then stopped out of a lot. Option Friday, it was very wild. It was, I mean, you could see it. The SPYs bounced to 446, then dropped back down to 440, 450. It was all over the place. It was sloppy trading. It was a way to end the week as like a very tough week. It was a very hard week. But, when
Summer Friday, like August Friday, right? Like, isn't that just like a lack of liquidity is going to push things around like that?
Yeah. So now, definitely. But also, you got to look at that. Like my shorts, I always say to the room, to everybody, my shorts are like 10% of my longs. Always. There's some shorts I get aggressive on where I have more of a feel, and that comes with time and trading certain names. Just in general, I always keep shorts smaller than my longs. So even though my day wasn't a good day, I came out ahead because I was aggressive in two of my longs.
Position sizing.
What?
Position sizing. It's very important.
It's very important. And that takes a long time to figure that out. You know what I mean? And listen, this is a different year. The market's going up. So you should be careful in shorts, right? That doesn't mean you can't make money on the short side. But in general, the market tries to levitate and go higher. Could the market trade sideways for years? Of course, the market can trade sideways for years. But and maybe that's what happens now. Maybe we trade sideways till the end of the year, a little down.
At the index level. At the index level.
You just don't know. But last year was a different year. The market went down. I got aggressive, much more aggressive on the short side because the market just looked like it was going to pull in, whatever. And, you want to make money because it was harder to make money on the long side last year versus the short side. So, you have to just be very, it's very hard. I can't go into people's accounts and say, hey, buy this much here. Short, let's say I trade in the 500,000 share level lot, right? My shorts might be 100 shares, 50 shares, right? So if I'm going to short something, sometimes I try to capture a buck or two. So it's minuscule. I can't even say that word, relative to my longs.
No, but it's important that you continue to reiterate that, Kimmy, because
I do that in the room all the time. I said my shorts are like 10% of my longs.
Different people have different objectives and time horizons and assets under management. So if I'm saying, I'm buying 100 shares or 1,000 shares or 10,000 shares, like that doesn't matter. That doesn't mean anything, right? It's all about what percentage of your portfolio that might represent. And that's going to be different for me, Spencer, Kimmy, Rachel, Joe, everybody in the audience is going to be a different answer. So reiterating that you have to answer that for yourself. And somebody might be like, Kimmy, that 10, 20% of the short, that's not enough for me. I'm going to go 30. Fine. Then make it 30% versus a long position. You know what I mean? Like, do what's best for you. But the thought process and the mentality and the bottom line of actually having to make that decision is very important. So kudos to you for reiterating that.
And I say that all the time in the room. And you always have to have your share amount ready. Like always think about like, hey, I'm going to buy 200 shares of this. I'm going to buy 500 shares of this. Know certain names. I really kind of trade in certain amount of names. I do enter new ones that might look good or I might have interest, but I kind of stay in my wheelhouse. So you have to kind of figure the way you get to know You know, it's like I call them my friends, right? You get to know the way certain stocks trade. And sometimes you get them right. You're not going to get them right all the time, but if you get them right majority of the time, that's good. You can't be perfect on them.
Hold on, Kimmy. Before you run, I love the theoretical conversations. This is right up my alley. But we're here to make money, and United Healthcare is the largest component of the Dow Jones Industrial Average, representing 10% of the Dow. Healthcare's second largest component of the S&P. There's a big name. Talk to us. Why do you like United Healthcare here? What are you looking
It's just stuck.
Yeah.
So that doesn't mean it's going to go. It could go or drop. Okay. I'm hoping, it pops up to 515 and then maybe 520.
So you're looking for a breakout before entering.
Right. Or I might try it before to see if it goes. But then this is a type of name, which I talk about, like a NVIDIA. You need to give it wiggle room. And if you need, this name trades, look at it, trades 5-10 points spread intraday. It could be a low of like 504 and then high as 510.
But this is a lot less volatile than NVIDIA.
It's very volatile. So you know what you do? I always tell the room, you size down. So if I'm looking to capture 4 or 5 points, if you buy less shares, you could take that wiggle room and capture the 4 or 5 points and make some money off of it, hopefully.
All right, guys, if you want to trade along with Kimmy, she runs a private room every single day. She's there right after she leaves our show, through the open, into the morning, calling out trades, calling out winners, and just, talking through trades, because trading is lonely. So if you're an active day trader, I recommend you check it out. The link is in the chat. The link is in the description. The link is on the screen. Don't know where else to put it. Kimmy, always a pleasure.
Go get him, Kimmy. Go get him, Tiger.
Bye.
All right.
Kimmy, Spencer, if you're like Spencer was saying, if you're a day trader and you're looking for additional idea flow, Kimmy's room is the one. And if you're not a day trader, like I wasn't, and you're looking for somebody who is a professional day trader for decades now, walking you through there every single morning, it's a great way to do it. And if you're also like me and you're busy because you got other shit going on, you can't just be there in front of the computer all day, every day.
Yeah.
But you could bang out half an hour or an hour in the morning. That's enough. Over half her trades are in the first 30 minutes. Almost 90% of her trades are in the first hour. So most people are like me, where you're busy and you can't just spend all day there. That's cool. You can still bang out 3-4 trades in the morning, make a few bucks.
92
amongst your day.
92 Fish Gut, great name in the chat. Can't wait to join your group. 92 Fish Gut, you can join whenever. Kimmy's so confident you'll like it that she'll let you join for a week and won't even charge you, or 2 weeks actually. Sorry, and see if you like it. What was that?
How about a little hot corner?
Yeah, investing heavy. What is Brewery holding in his 13F? 13F deadline is tomorrow, by the way. So we'll probably get, if you care about such things, probably talk about that tomorrow's show or maybe the day after. Hot corner. Let's do that.
All right.
Hot corner. So hot right now.
Dude, these are serious transactions coming through. No piker purchases today, boy. They are coming in hot. So hot.
Table up. Give me the table. All right. So
that black screen of death that Spencer loves so much.
Yeah, the most.
Oh, I fixed it.
You guys done? The most interesting one on today's list is Expensify. This is now the third time we're talking about this name in the last 5 trading days, right?
Citadel.
But what happened before Citadel? We saw this guy from his little private equity company come out making huge purchases right around earnings, right? Now Citadel announces a original filing with a brand new 4% stake. So that's getting bigger. If they're filing a 13, it's going to be at least 5 soon, right? They're planning for 5 or they wouldn't be filing this. And it seems like, what was that guy's name? Stephen McLaughlin. How could I forget? Was kind of front running this Citadel news, it seems to me.
That's
no.
Well,
it's not really Citadel news per se, as it is Citadel's buying it. You think he's front running Citadel's purchase?
I'm sure that he knows the people at Citadel.
Wait, can I ask a question? This is Citadel Advisors. This is the hedge fund.
What's that?
Is that the Citadel that we're always talking about?
I don't know. There's like 5 Citadels.
Yes, I would imagine.
Well, whether it is or whether it isn't, it's a sizable transaction. What about Crocs making another appearance? And this time the CFO, Strazza likes it when the CFO is buying because he knows the numbers better, or she knows the numbers better, right?
So I know that you're looking at the larger purchases here, which we can talk about, but Crocs and SolarEdge really stand out because they got CFO buys.
Yeah, but is the CFO broke or something? Why do you only invest $200,000?
A lot of these CFOs, man, they're paid well, but that's still a lot of money.
You're the CFO of a publicly traded company, and you only got $200,000 to put down. It
don't
doesn't sound like
you don't know how long he's been CFO for. You don't, dude. You do not know these people's.
It just doesn't. It seems like if he really wanted to buy it, he would have bought more than $198,000 worth.
I don't know. I would be more concerned, like the topping pattern in something like SolarEdge is something I would really want to stay away from here. This stock is just, completing a fresh, massive distribution pattern, breaking new multi-year lows. So interesting to see him step in here. Again, we're going to see more activity on our hot list, in the coming weeks because of the blackout periods just ending for a lot of these companies' earnings. One that I would kind of direct our attention to would be Tidewater. So,
I was going to say, you took the words right out of my mouth, man. That's a big purchase. What is it? Offshore oil and gas? Yep.
So this is the kind of stock we want to be looking to buy. This is a tanker, I believe. Yeah, marine shipping, Tidewater. Engaged in the provision of offshore marine support.
Oil and gas, offshore services, but you're saying that it's tanker-ish. Yeah, marine services.
Tanker.
You're right.
This is an oil tanker. So it might be transports. It might be energy. The sector doesn't really matter. This is a stock that literally transports gas from one destination to another, very much involved in if there's a bull market in energy, this is the kind of stock that's going to do well. And look, we have some clear levels. It's already hit one of our targets after breaking out of this nice multi-year base. So above 56, this is a really good looking chart pattern, and the insider activity really stands out.
Yeah, Jerry's talking about how $200,000 is a lot of money to you. Yeah, $200,000 is a lot of money to me too, by the way, and to a lot of people in this world. But your wallet is irrelevant. So's mine, for that matter. We're specific.
Averaging in, maybe? I don't know.
I don't know. I just don't. It doesn't seem like that much conviction. $200,000 is a lot of money for some people in this world, but none of those people matter. The only person that matters is this guy, and he's the CFO of Crocs.
These guys already have stock, though, JC. Think about it. They're getting stock. Their comp packages give them stock. They probably have enough stock.
I'm not that excited about it. I don't know what to
tell you. The fact that they go out and want more stock and are buying it on the open market is always.
How about this guy, Robert Robotti? Robert Robotti, this guy. Who is this guy?
This is the one.
No, but who is he? Because whoever he is, he's dropping $3 million on this. Now, that's conviction, right? That's conviction, Jerry. $3 million.
It's
on Tidewater
statement because you don't know the liquidity position of these other guys. These
Robert Robotti. Who is this guy? $3 million is a lot of money, right? Unless he's a billionaire, then in which case you're saying that he's nothing.
The chairman of the board. He should be out there buying that much.
Robert Robotti. Look at this guy. All right. Robotti and Company. I don't know.
He's an oil and gas guy. He's been around.
He's been around for 40 years.
Yeah.
Maybe he knows what he's doing. His net worth is $66 million. Okay. 66 million, so he's not broke. He's got a couple bucks. Put up $3 million. That's legit.
That's a lot. That's a lot.
Yeah. I see, that's not a piker purchase. You see what I'm talking about, guys?
Here's the thing. We don't know that his net worth is $66 million. These numbers are total garbage.
We don't know.
Okay? And it tells you nothing about the liquid net worth.
You took the words right out of my mouth. Man, we're hanging out too much these days. Yeah, you took the words right out of my mouth. You don't even know what his liquid net worth is. That's right.
We could play this game like what we just did and what we just discussed, but we really try not to when we're looking at this list because we could probably, misdirect ourselves more than kind of like find some sort of a gem and like, oh, this guy's got so much conviction. We don't know their personal situations.
How about some unusual options activity in the old uranium space there, Mr. Strazza?
What was it NXE? Look,
NXE.
I'm long CCJ, and I've been looking at some of the other names. Cameco does look the best. It's the biggest. I'm comfortable owning it. I think it gives me good exposure. But this one's interesting. Yep, drawn just like this. You got those pivot highs. I mean, you could draw a downtrend line at those pivot highs if you want to. It looks like we have some sort of little base shaping
How
up.
come all these uranium stocks are Canadian, eh?
Come on, you know the answer to that.
I don't know. Why is that? Is it because Canadians are into uranium? No.
Yep, and also I think these standards have always been looser out there.
Oh, okay.
Right.
Just wondering. That was a legitimate question. I'm not trolling.
Yeah, and also they love natural resource stocks. So
They do. They do.
Listen.
Spencer, tell the folks where they can get the old hot corner. One of my favorite emails I get every day.
Yeah, as a reminder, the point of the hot corner is to highlight, significant open market insider buys, and then we sort of cross-reference that with the charts that look the best, and we give you a list of buys, and also among those buys, which of these charts actually look good, and we don't want to look at the ones that don't. But anyway, hot corner goes out every single day. It's a free daily note. I know I've been saying this for a while, but I actually will have a landing page this week. I promise. But in the meantime, just email me questions at stockmarketmedia.com. Put a hot corner in the subject, and I'll get you on the list for that. It goes out every single day. The guys do a great job with that. We will have option Sean McLaughlin on in a sec here. Before we do that, did you want to cover the chart report real fast?
Yeah, let's talk about the market. Update on the market.
Oh, yeah. Sorry, we are open.
Dow futures are flat. S&P's down 20 basis points. NASDAQ 100 down 20 basis points. Bonds are down a little bit. Gold down again, down 50 basis points. Silver down 1%. Copper pretty much flat. Oil down about 1% off the lows. NASDAQ flat. Dollars ticking higher this morning with volatility elevated a little bit as well.
Staples at the top of my list.
Every single sector is lower on an equal weight basis. 5 minutes into the open here,
right? So let them dance.
Yep.
Right? Let them dance. Dance.
We had some kind of one day relative strength from small caps on Friday. An interesting green candle in what was otherwise like a sea of red, but no follow through today. Now IWM falling to its lowest level since early July now. So a lot of multi-month highs or 1 month highs out there in some of these groups.
Also, another data point to that suggests that this is more sector rotation and not the beginning of an epic crash is the lack of rotation into low volatility and consumer staples. Not seeing a bid there at all.
They were kind of like bouncing off of those like key levels, right? But you're saying
they're not going down,
right,
okay?
Right.
Which is step one. You can't go up until you stop going down. So stop going down, but they're not inching higher. In prior massive corrections that you've seen in the market, you've started to see that rotation heavily into those more defensive areas, and we might see that. I mean, I have no idea what's going to happen, but so far we haven't. It's really just been sector rotation, healthy sector rotation versus rotation into defensives. Leading to a market crash. I haven't seen that at all yet.
The real rotation has been into energy, industrials, and financials. Hold on. Let me address this question real quick, Spencer. Inside sales are harder. Okay, you tried. We don't do the same thing that we do with the sales as we do with the buys, right? And for good reason. It's because, as Spencer's alluding to in the chat here, there could be a myriad of reasons why an executive or some sort of corporate insider is coming out and selling stock, right? The one thing you do want to be mindful of, and we see it all the time, and you're going to see it all over Twitter and all over CNBC and the Journal when it happens, is if there's a big founder stake, something like Jeff Bezos or Elon Musk, having to sell a lot of shares because, say, maybe he's buying Twitter in a private market deal, that will put selling pressure on a stock just due to the sheer size. So you want to be aware of it from a market dynamics perspective, because he's just going to be flooding the market with supply in certain situations, right? And you probably don't want to be in stock like that. But what you don't want to do is make some sort of a inference that CEO or that founder thinks less of the stock and doesn't want to own it. No, they're probably just selling because they own too much or have other things that they want to spend money on.
And then Rick in the chat bringing up a great point. This BTAI down 45% was in the hot corner last week. It's why we ignore penny stocks, right? This is a little penny stock, tiny little market cap. Let this if anybody's wondering, or curious, like, oh, maybe I should start buying penny stocks. Maybe I should buy $100 million companies. Here's, example number 297 as to why we don't touch these things. If you can't even get to $1 billion market cap, you're useless. Like, you suck. Like, you're not worth. You are below my line, right? Like, you're not worth it to me. You just go away. You're a zero.
I'm gonna shout out.
And also, hold on, one more thing.
Yeah.
And if you want the juice in your portfolio, like if you have convinced yourself that it makes sense to buy penny stocks because you want the volatility, you could buy real companies, and there are derivatives markets in those real companies that give you as much juice as you want. So
He's saying,
you guys do what you want. You're all adults. Stay away from that shit.
JC's saying just buy Johnson & Johnson, put on the YOLO calls if you want some.
Like
juice.
if you want the juice in Johnson & Johnson because it's like watching paint dry, then you buy some YOLO calls. You get all the volatility you want.
I'm gonna call out a penny stock since we're on our penny stock segment, because I know Spencer's gonna remember this name due to his years of experience at Benzinga. Zynerba Pharmaceuticals, Zyne, Z-Y-N-E.
Yeah, I remember the ticker. I don't remember the name, like the name of the company, but yeah, Zyne.
Why are we talking about penny stocks?
Yeah, Zyne rings a bell.
Oh, because it's up 290% today?
It was one of those big, hey, they're making a drug that's going to cure seizures with cannabis type of things.
I remember Zyne. Yeah.
I used to get the empathy or the sympathy bid with GWPH all the time. This stock has pretty much gone to zero and is now, this shocking turn of events, getting bought out for pennies on the dollar, and is.
I see what you did there.
Hey, real fast, there was a question in the stock market media chat this morning from Pete about energy looking real good, but he's asking about the commitment of traders report, and which I have here. If I can bring up on the screen, what does the COT report look like for energy, and how is it informing your bull or bear view? So here's the COT report right now.
Yeah.
I guess the energy's at the top there. It might be a little bit hard to see. I'll go full screen on this, make it a little bit bigger.
Yep. So energy right now, we really pay most attention to these things when they're at extremes.
And they're not.
They're not right now. If you look at energy, we have that position as percentage of the 3-year range, which will tell us if it gets close to 0 or close to 100 that we're near an extreme. But really nothing stands out here in energy right now. I mean, JC, you tend to do more work around the COT than I do. What do you think?
Yeah, no, I think you nailed it. When it comes to sentiment in general, not just the COT, almost always the data is useless because it's just middling around. The only time that we're really interested is at extremes. And, we started out the show talking about sentiment, and we're seeing just point after point after point of sentiment getting stretched to the bullish side on the equity side, right? Not so much in commodities, but in the equity side, with Hurra Bears capitulating, the worst ETF in history getting delisted, the magazine covers, just one after the other, just as our upside targets are getting hit and some of these indexes are rolling over. Like, it's just perfect right at the beginning of the seasonally most weakest period. So it's not like one data point. It's not one thing that we look at. It's really putting the pieces of the puzzle together. Yeah. And I'm not saying that it's easy, and I'm not saying that we're perfect. But I do think that we do a pretty damn good job of analyzing this data. I do.
I think that we look at positioning for everything that we should be looking at positioning for. Right? It's most effective in these commodities markets. And there's a question in the chat. What's the open interest? I think you mean the short interest on WeWork, and that's a good question. Let's check.
What's the ticker symbol for WeWork? This thing still exists?
We, as in we are going bankrupt.
It's $180 million. Who gives a shit, man? Stay away from this stuff. Can we stop? Can we stop talking about these penny stocks on the show? Like, what is this?
Just one more. This is one more because it's in the news today. Nikola, it has some recalls. So
yeah, but Nikola's not a penny stock, is it?
Oh no, it's $1 billion.
Wait, one more. This Ape AMC Entertainment.
Okay, so that's in the news too.
Come on, hold
on, stop. What happened with Nikola?
They had some recalls. So yeah, it's $1. The stock is $1. So
right. Yeah, as it turns out, it's not a real company. They're not making it.
Right. It's not a real company. It's below my line.
And AMC Ape, the conversion is going to happen now, which is why Ape is up 20% today, and AMC is 6%. Down. Yeah, they're
I'm sure there was a good reason for this, but I mean, this thing.
Can someone explain to us non-memers what just happened here with the ape?
I can.
Yeah, please do.
Yeah, the APE ticker was an end around. AMC was not allowed to issue any more shares of stock.
Preferred shares.
So it was an end around. Yes, so they issued a new class of preferred shares with the idea being they would just convert the ape shares to the AMC shares one day. It's been in court for like several months now. The AMC shareholders sued to stop it from happening, and now now it's going to happen. So anyway.
Hey, when you need the money, you do crazy things when you need the money.
Yeah. All right. Let's get Sean.
Crazy or creative, Strazza?
Oh no, it's definitely creative as hell. Yeah.
And don't you have to be somewhat crazy to be this creative?
I don't know if I would call them creative.
Didn't Van Gogh cut his ear off or something like that? Dude was very creative.
I'm still in my coin and riot calls. Yes, James.
Hey,
I need to really get aggressive if this thing breaks out. I really do. These crypto, they're not doing anything, man. Look at this. Mara down another 3-4% today.
Since we're talking about calls, let's bring on our options guy. We got Sean McLaughlin here. All-Star Options. Let's do it.
Man,
Honey baby.
Sounds like JC woke up on the wrong side of the bed this morning. A lot of hate being spread around.
What hate?
Hating CFOs, hating penny stocks.
I don't hate CFOs. He invested $198,000. Like he's broke. Like, come on.
Yeah, Sean, spread the love. Come on.
I'm here to spread the love. The demographic wants the happy face here, so I'm here to tell you guys that everything is all right. Am I angry
today? You think I'm angry today?
You should have heard him off air this morning, Sean. Thank you.
Yeah, I'm just calling you out, JC. You're a little aggressive this morning. A little aggressive.
You came in hot
spicy
on this Monday morning. On this fine Monday. Yeah.
All right.
I don't know. Well, maybe I'm more sensitive to it. It's a sleepy day here at the McLaughlin house. Late night last night. Festival season came to an end here in my little town. Big music night.
Festival season.
Sounds we have a little a concert venue here in my town that has 2 big concert festivals in the summertime, and we came to a big end last night, and fun times.
Party time.
All right. So why don't we talk about volatility a little bit? VIX, not at its lows anymore. VIX, at the driving age again at 16, huh?
VIX not at the lows, but I mean, are we really getting freaked out about VIX at 16? I mean, people have short memories, and it seems that they have forgotten that the long-term regular range for VIX throughout most of its history has been 12 is kind of the floor. That's when markets are cool and comfortable and no one's freaking out. And 20 is the upper level where, if we're up at 20, then the market's worried. And so at 16, we're right in the middle of that sweet spot. So to me, actually, that doesn't give me any information at all. I think the VIX is just, a non-event.
That's what I was going to say. From an options perspective, are you approaching the market any differently than you did when the VIX was at 12, 13, 14? Not really, right? You're kind of more on an individual volatility basis?
No, I'm not going to get worried about this market until VIX gets back above 20.
I'm not worried about the market. I'm talking about executing a trade in the options market and how the volatility regime impacts the strategy. So, for example, we've been incorporating, for the most part, very low volatility strategies because volatility has been low. So I'm not saying volatility is high, but it's not as low as it was. Are we changing that mentality at all? Is my question.
Well, look, that's a good question. And when it comes to putting on options trades, VIX by itself is not really the input I look for. It's nice to be aware of the overall volatility regime that we're in. But when I'm putting an options trade on in stock XYZ, I am much more interested in the volatility of that particular instrument, because the market could be sleepy, but that stock could have crazy implied volatility because of earnings or a product announcement or a CFO who bought $300,000 worth of stock that JC's not interested in because that's not enough
money. It was less
money.
than $200,000 actually.
Well, anyway, be that as it may, it's I look at it on an individual basis. I'm looking more specifically about the instrument. Where I care more about VIX is many of you know I also trade index options, and when I'm putting trades on in the indexes, VIX is a little bit more of a more important input for me. But individual stocks, no, it's just I'm mindful of it, but it's not part of my process.
All right. So you nibbled a little bit on this marathon last week, quickly got stopped out. You know, how are you approaching this Bitcoin miners? Just sit back and wait, let them do their thing, let them break out, and perhaps re-enter then?
Yeah, I mean, look, I'm with you. We talked last week about Mara. We only really wanted to be interested if it's above 16. Ride if we're above 1750, and we're not there yet. I got, like you said, I got stopped out. That was a quick stop out, which by the way, I love a quick stop out.
Me too,
I
man.
would much rather get out quickly.
Yep, exactly.
Yeah, so I'm not salty about that at all. I mean, we still have a Mara trade on that we put in a few months ago that is still working. So you know, I still have some skin in the game in Mara, but yeah, it's wait and see, right? I mean, you talked about it.
Legacy position from an old trade that worked really well.
And you talked about it earlier at the top of the show. I mean, Bitcoin is just doing nothing right now. So until we get some action in the coins, we're just wait and see on this ride in Mara for sure.
Yeah, and no, you know, Strazza was talking about the lack of anything. I mean, Bitcoin's just dead. It's just left for dead. Volatility. You know, we look at those Bollinger Band compression. You know, it's like
I think it's incredibly bullish.
I think it's incredibly bullish for volatility because from volatility contraction comes that expansion. The question is, which way does price move in that vol? You think higher?
Well, I mean, you know, first they scare them out, then they wear them out, right? And I feel like that's what's happening in Bitcoin right now. And I mean, look, it could go sideways for another year. Who knows? But I think as long as we don't have any meaningful pullbacks from here, I think this is incredibly bullish, constructive action in the crypto space, Bitcoin in particular. And you know, like you said, we've been saying it for the last 2 weeks. These miners will rip if we get, you know, an upside resolution in
yeah, there's super leveraged plays on these, you know, but is that going to happen in the middle of August with tech?
Yeah, probably not.
Tech under pressure, you know?
Yeah, probably not.
That's right. So what is on your mind?
Hey, Sean, the dollar's hitting new year-to-date highs versus the dong having one of its best year.
All right, bring on the dong jokes. Every time I talk about Vietnam, Twitter goes wild with their dong jokes.
I mean,
it's
easy.
The jokes just write themselves.
Yeah.
But we were all amazed at how far the U.S. dollar goes when we're in Vietnam. It was pretty impressive.
Spencer was the one talking about reach arounds just now with the ape coin.
Hey now. This is a family show, Spencer.
I said end around.
Oh. We heard what you said.
Okay, that's quite a bit different.
Tomato.
That's quite a bit different. But hey, you know, what's on my mind this morning is, you know, I've been listening to you guys talk, and I mean, you're not telling me anything I don't know because we've been talking about it back channel for weeks now, or at least a couple weeks. But, you know, this overhead supply that we're seeing here that kind of coincides with the seasonals, you know, as the options trader that I am, it's got me thinking that I need to put a little bit more delta neutral exposure on in my portfolio, you know, selling some premium. Not a lot of volatility out there to sell, which is...
I was going to say, we haven't been getting paid for that. Are we getting paid a little more now?
I mean, we're getting paid a little bit more, nothing to get excited about. But at the same time, if we're setting up for a sideways grind here for a little while, you know, it definitely has piqued my interest to be looking for things that I can, you know, bet on some sideways range on. Maybe I won't get a whole lot of juice for it, but if I can put on 3 or 4 different positions, you know, diversify my portfolio a little bit, that would make me feel a little bit better. But that's kind of where my head's at this morning. Those are the kind of trades I'm looking for right now in my personal portfolio.
Yeah, let's talk. I've got some ideas, maybe some of these industrials potentially.
I mean, look, maybe I should have tempered that by also saying I have a large number of long positions on them. So I'm already, you know, I'm already exposed long. So this is really just more of a, hey, let's spread out the risk a little bit. Let's diversify a little bit. Let's get a little bit more balance in the portfolio. And this feels like the time to do that.
Maybe sell the wings in General Electric.
Sell the wings in GE. Let's see what that looks like. I don't know, man. That seems like a pretty strong trend right there. I mean, over the last since the beginning of the year.
That's right. Give the people what they want. Sell the wings.
I don't like selling wings at anything that's trending as strong as that is trending.
All right, you're looking for something messier, huh? How about like a Freeport Macmoran?
Let's see what that looks like. FFCX.
It's right in the middle of a massive range. It's right up your alley.
That's more my speed. Now you're talking.
What? You sell the 45s, sell the 35s?
Let's see what kind of juice we get for that. I would probably be looking at September options. 35, 45. Yeah, it's worthy. We're getting if you sold the 35, 45 strangle in September right now, you get about 75 cents, which is what?
75 cents? Is it worth the squeeze?
That's 1.5% approximate of the underlying stock price. That's not bad.
I'm not going to do it. I think it's too far. You're going out too far. 40. What about like a 42 and a half, 37 and a half or something? That's too
42
close. That's too tight.
Well, sorry, what were those strikes again?
Like a 42 and a half, 37 and a half on the Freeport.
You'd have to. There's no halves. You'd have to do 37.43. You'd get $1.48.
I like that a lot more. Is it too tight? You think?
Let's see. I mean, look, you're the technician here, buddy. But 37 on the low end does not seem. I mean, that seems good because we got some support there.
All right, we're selling the 43 September 43s calls, selling the 37 puts in September on the Freeport Macmoran. Get it, baby. Are we covering it all when we could buy it back for half? Is that the strategy here?
I mean, that's usually what I would do. I'm not sure I would sell that 43 strike in the calls, maybe 44, but that's just me. I'm a little bit more conservative than you are. You're a big swinger sometimes.
Am I?
Depends.
The dollar is ripping. I mean, this is the price action that we should be paying attention to today. This action in the dollar is, we're heading back to the upper bounds of that range. If you throw up chart one, Spencer.
Dude, this dollar is ripping, bro.
Against everything. I'm over here charting it.
And that weighs on the stock market, right? That's going to be something we got to fight through.
Anybody who has fought the negative correlation between the United States dollar and the stock market has paid the consequences and suffered greatly, which I'm thrilled about because people have been fighting me on this for years. And every single time they fought me on this, they were wrong and we were proven right. And it helped us make money and it helped them lose money. So I'm totally for it. Dollar's been ripping. We've been talking about that and stocks are under pressure. Like, where you been, bro?
And the momentum profile here in Dixie too just kind of speaks to a mess, right? It's getting just about overbought. It's getting oversold. Now it looks like it's back to getting overbought. It's not giving us any, clear direction of the trend.
Ellie,
Strazza, I love it when you call it Dixie.
Ellie got MC says that we don't have enough wild movement for selling naked calls. No, my friend, that is why we're selling naked calls, because of the lack of wild movement. We're not trying to get stopped out of our trades here. There's just enough wild movement to pay us. So I would argue it is not so much that we don't have enough, but we have just the right amount, right? Sean?
Well, I'll just reiterate that I agree. This is not a juicy, high volatility, high premium environment to sell strangles in, which is the ideal environment to sell them in. What more the thinking here is this is more of a directional bet, right? We are betting that prices are likely to go sideways in a lot of instruments over the next.
And it's also a portfolio diversifier because we have so many directional bets. And a lack of delta neutral exposure. So it's also that. So if you have enough delta neutral exposure, then you're okay. But for those of us who do not, we're looking to add some.
Right. Look, as an options trader, we have lots of tools in our bag, right? A lot of clubs in our bag, as Strazza likes to talk about.
Okay, here we go.
And look, every one of these clubs in our bag has the perfect setup where you would like to use that instrument, right? That's the time to use it. But it doesn't mean they won't work other times, right? Like,
you can't just use the hybrid for every shot, right, Strazza?
I mean, look, if I'm 40 feet off the green, every once in a while I'll use my 3-iron and just kind of nudge it up there. Just that's me.
In golf, it's talked about in yards in golf.
JC putts with his hybrid.
My putting is so bad I probably should. Can we get some recess? I got a hot take. A very hot take.
Yeah, we can get some.
I never knew that I would have.
We can get some recess.
All right, Strazza, you ready for this? You're not going to believe it.
Let's hear it.
How many times on Friday did I tell you? Was it Friday? Yeah. How many times on Friday did I tell you that I had a ribeye cap ready to grill for the evening?
At least 4, and then you sent me 0 pictures.
I got to tell you, in my head, this is going to be the greatest steak of all time, right? Because it's the cap of the ribeye, so it's like the best part, but cut across the top. So like the best part of a bunch of ribeyes all in one steak, right? So like this is going to be fantastic.
Burnt it.
You want to know? Okay,
Burnt.
so this is one of those things where like in theory it's great, but in practice, here's the situation. The steak is great. Don't get me wrong. The steak is great. It's a ribeye, but at the end of the day, it's just a ribeye. Like if you're going to go unique steak cut, if you're going to go something that's a pain in the ass to get, like if you're going to go that extra mile to have a special steak that you don't have often, I think you just go straight to Wagyu, because now you're getting a legitimately better steak as opposed to just the best part of a regular steak. You see what I'm saying? I never thought that I would have this, that I would come to this conclusion, but this is why you need to try things, guys. You can't just assume that something's going to work. You got to actually put it into practice and execute. Kind of like using chicken thighs for chicken parm. In theory, it's a great idea, but in practice, you don't need the extra grease. You got the cheese, you got the sauce. You don't need a greasier cut. Use the breast, right? Another great example of, in theory, something's going to be great, but in practice, it's just not necessary.
So to recap your experience, the lesson learned was more Wagyu.
Seems like a lesson I continue to learn over and over and over again, right? Wagyu's the way to go. Ribeye cap is fine, but it's such a pain in the ass to get. If you're going to go that extra mile to get something unique, just go Wagyu. Forget the ribeye cap. Yep.
All right. In the spirit of trying things new, could we talk music for a second?
Oh,
Of course.
Do we have any blues fans in the house? You guys?
Oh, I
you
thought you were
guys
going to talk about the new Nas album.
No. You guys like blues?
I like me some blues. All
right. Well, the headliner of the show last night was not blues. It was Charlie Crockett. He's a honky tonk guy.
Yep.
Big crowd pleaser last night. But the band that stole the show here this weekend, surprised everybody, was this band out of Nashville, fronted by 2 sisters. These girls played some good old-fashioned roots blues, slide guitar, and just melted faces here. They were called Larkin Poe. Look them up. They were fantastic.
L-A-R-K and Poe, P-O?
Larkin, L-A-R-K-I-N, Poe, P-O-E.
I found them.
Check them
Larkin
out.
Poe.
They melted faces this weekend. Big talk of the festival.
I like some.
How old were these girls?
You know, they're older than they look. They look young, and it surprised everybody. But they when they said on stage, "We've been touring for 18 years together," we were like, "Whoa, really?" They look like they were 25 years old, but they look great. But more importantly, they sound great. Put on a great show. Just brought the festival to its feet, and everybody was having a great time.
All right. I'll check them out. I'm a big blues guy. My recess went to a comedy show over the weekend and was very, very pleasantly surprised to see someone that is one of those comedy seller type things. So you don't know who's going to be performing. Saw someone that I actually know. This guy Jeff, or not know personally, but know of Jeff Arcuri, A-R-C-U-R-I, Arcuri. This guy has got like the best crowd work I've ever seen of any comedian. His crowd work is amazing. You just ask one question and just riff off that for like minutes on end. He's hilarious. I recommend checking. He's very, very, very popular on the internets, on the socials, all that stuff. Jeff Arcuri, A-R-C-U-R-I. He's hilarious.
Hey, Spencer, I'm glad you brought up stand-up comedian just for a sec. I talk about this a lot, and maybe we should have a show about this later on, but for anyone who has watched a documentary about a stand-up comedian, or listened to him talk about on a podcast, not being funny, not telling jokes, but just telling about their process and how they got started in the biz and all the hard knocks they took and all the empty rooms they played in front of. If you listen to a stand-up comedian talk about their process, we traders can relate a lot to that. think about it. There's a lot of us who work alone, do our own thing, trade our own money, risk our own capital. And we go through a lot of the same mental hurdles that stand-up comedians go through. So I have a soft spot for stand-up comedians. Amazing people.
For sure.
Amazing job.
All right, here is the schedule for the week here on Stock Market TV. The Flow Show, back from its hiatus. Strazza and Sean, 2:30 p.m. Eastern Time today. We got that going on. That's about it on the programming schedule for the day. As always, please follow us on all the socials. We're on all of them, except for maybe Threads, perhaps. But check us out there. Thanks to our guest today, Jay Wood. Thanks to Kimmy Sokoloff. Thanks to Sean McLaughlin. Thanks to all of you in the chat. If you want to head on over to YouTube and, hit the thumbs up or subscribe to our channel, we'd appreciate that. We would even more appreciate if you head on over to our site, stockmarketmedia.com. Poke around and explore a little bit because we got some cool stuff on that. You can always watch our shows on our site as well. We have a whole chat there, and it's awesome and it's beautiful and we love it. So thanks to everyone for watching. Have a great day. Go make some money. See you guys later.
Bye, guys.
Adios.
I can't take no loss. I don't even know what it costs.